All right, good afternoon, traders. Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, April 15th. And, some, I would say, would classify today's price action as ugly, but probably with an asterisk for the day. So just breaking down that price action, you did have SPYs down more than 2% on the day. Qs finished down 1.1%. Again, buyers continue to kind of come back into the Qs. And so let's put this in red here. And then really the big the big underperformance again continues to be in the small caps. They did not even manage to rally. Coming in the day down about 4%, they didn't manage to rally at all. Same thing with SPY. It really didn't attract too many buyers in relatively, all the sectors or the whole index. We did see, and if you break this down as well into sectors, right? Because again, just as a repeat, always what I'm looking to see, depending if we come in really strong like we did yesterday, is to see if buyers are still coming in a strong tape, or what I really like to see is in a weak tape. If investors and big institutions think that it's a good buying opportunity, and they basically come in and take advantage of it. And what we're seeing is only in really select names. The market breadth was pretty ugly today, and if you take a look by sectors too, there was very few sectors that actually finished up from where the open was. Again, so really, it didn't seem like institutions were that enticed to go after a lot of different groups. They went after things selectively. So while I've only got a few names highlighted, right, that went up like over 1%. The Fang names continue to be really hot, right? So, again, this isn't, this is just looking at each particular sector. There's no weighting, but obviously, when Amazon and Netflix go up like they did, that's going to make more index points, right? Because the S&P, the Dow, and so on and so forth, they are not equally weighted indices. They are market cap. So the bigger the company is, the more it influences the overall index, right? Just a function of how you weight an index. So, some of these things are a little bit misleading, right? When you look at Amazon and you see that. But, I mean, so look at how many groups, again. What is striking to me is the banks are like on the underperformer list just about every day. Maybe one out of every 3 or 4, 5 days, the banks actually participate, but they are just continuing to go down, 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 and that's not really too healthy. When again, like I don't need to. For me, like my opinion is, I don't need to see the banks lead the market. They just, for me, for like somewhat of a healthy tape, they just have to participate a little bit and hold in there. We don't want to see like them completely go down. So that's a bit alarming when you see something like that, right? So KRE, for example, this is what the weekly chart looks like, and then we'll talk about the S&P. But you could see this is fading pretty decently. This is almost back to the lows. So again, depending on different groups and different stocks, I'm calling this and I'll write this in here. This is the have and have nots market right now, and we'll see if this changes or not. Because certainly what we're seeing is software names, any of the names that are really the work from home or stay at home names, they are outperforming right now. For a while, remember, a couple weeks ago, more than a month ago, we were seeing basically everything go down. Well, now it is a little bit different. You could see I've highlighted some names that are seeing option activity, and many of these names, they're not industrial, they're not banks, they're not energy, they're not a lot of consumer discretionary either. Besides names like Roku and obviously Netflix, which has been getting a good, good push. But it's a lot of names that are benefiting from the work at home. So let's talk about the S&P. So that's the world that we live in right now. We don't know if that's going to change too much. And you kind of have to be a little bit mindful because software does go in waves, right? Sometimes we will see the software and cyber names outperform for a couple days, and then sometimes they will actually lead the market lower. So you just have to be, in my opinion, right? And everything that we're going through is always information purposes and not giving out any advice or recommendations. But be careful how you're stacking your chips here. Even though these names are performing really well, I don't want to put on 5 or 6 of these software cyber names because I've seen this before. I've seen this before where 1 or 2 days they sell growth, right? And all these names can get hit really hard. I'm not saying that that's coming. I don't have a crystal ball. I'm just saying be mindful of your positioning. Now, if you're doing a lot of day trading, you're okay with this, but we've seen this. We've certainly have seen this before with software. So be careful of a little bit of narrowing breadth, which we're seeing right now in the marketplace. That concerns me a little bit. So also, if we look at the technicals, we're kind of at an interesting area. So I do think we're going to need to see some more participation. But remember, this weekly bar here, the line in the sand that we've been talking about now is 2774. So we'll see. Just yesterday we were deep into to this value area for the year. Again, this is the weekly, right? So we're looking at a value area, this shaded area, which is based on last year's price action, right? Giving us some really good support and resistance levels. But it'll be interesting to see if we can close inside value because we're right around there. We close at 2770. Also notable, we're really at there's multiple time frames that are lining up with support and resistance right now. 2731 is your support on the daily chart. If we drill down to the 1 hour, you're also going to see a level here that I was talking about that that S&P was basically on a tightrope earlier, and then we rebounded a little bit, but then gave it back at the end of the day. 2751. So we'll see what happens in the after hours market. I personally like if this starts to move back into value for the week, we could see volatility. I think begin to pick up again. So that's kind of the line in the sand is this 2751 for the rest of the week. And again, notice what we're doing here. We had 2 days of really good performance, and then a big down day today. So we're kind of basically almost back to where we were starting in the day. So so what does that translate for me when we're at like such a big decision area and it's lining up on multiple time frames? Be careful of your position sizing, right? There's no reason to push things here, in my opinion. After we've had some really nice price action in a number of names. Keep in mind it's earnings season too, which is always typically difficult to trade. So remember, because I think everybody gets impatient very quickly. They have a couple good days, and you get aggressive just by nature, right? I'm just kind of going through something that I've learned in trading year over year, time after time, is that when you start to do pretty good trading, you get a sense of confidence, and which is good to be confident, but it's not going to be overconfident. So if you find yourself putting on more positions here, just because you've found a lot of things that are working, just take a deep breath, go for a walk around the block, social distancing, of course, but just be mindful of your positioning here and don't make the same mistake as putting on too much exposure. Now that we've had, all that, heavy bearish sentiment has been pretty much washed off or washed out. Sorry, I'm mixing up my terms here in this video, but the sentiment has recouped, right, from where we were, where everybody was basically on one side of the boat. In terms of what you've seen in surveys and various different indicators showing you that everybody got not bullish, bearish. Well, now that's not the case anymore. So be mindful of that. The trading opportunity is not as good, I think, as it was. We're still dealing with a lot. So that brings you up for tomorrow. What do we have for tomorrow? Tomorrow's Thursday. We've got jobless claims. Just like with earnings, right? I really don't overemphasize these things because we know that there's going to be a big number again tomorrow, right? Just like today, there's housing numbers. Of course they're going to be bad, right? Which they were. So retail sales came out today. not a surprise. These things should not be a surprise, right? Remember again how the market is forward looking. Most of these things are priced in, right? But then again, you have to remember too that where we got with sediment too. So I think be picky, continue to be picky and choosy here, and it's okay to sit out a little bit too. After this nice swing that we've had. So there's no sell signal yet, but we're getting pretty close, right? So that's the main thing for me to watch. Again, and the option activity, just reminder how I interpret option activity. It's great for an idea, but you don't know what their position is, right? If you see call buying on the tape, you don't know what their position is, and you don't know if they know anything or just are playing momentum. I say this all the time. The majority of flows, and again, everybody has different opinions on this, but the majority of flows that we see on the tape are just momentum, right? They're going out to like April calls, or maybe they're going out to April 24th calls, and they're seeing a stock go up 2%, and they're playing it for a 4% move, right? We see that all day long. By the way, we are seeing more call buying in individual names as a whole in the last few days. But at the end of the day, like they're not going to call you and tell you that, oh, they were just speculating that day and unwound them. So it's really tricky because everybody on Twitter seems to love call activity, right? But um, they don't tweet out any of the losers, right? What they'll do is some of these guys on Twitter they'll tweet out 20 names, and then they'll talk about the three that really worked. So that's not part of this is not part of any risk management, right? It's just kind of telling you where there was some momentum in the tape, right? And again, and if you look at this group, a lot of it is um, based on what is working right now, like Zscaler, right? And keep in mind, Zscaler, we talked about this name yesterday, and I got into the position yesterday. What do? They buy calls today. Why? Because it's going up. So, this is not magic stuff. So again, the reason I try to point this stuff out to help you so that you don't basically follow option activity and stay in a trade that may not end up working just because you think that they may know something, right? So it's kind of like one of those beginners things, and I know that there's guys on Twitter that are there to fool and to try to persuade you into something that is not really is somebody just trading on basically momentum, right? And again, we can use this to our advantage. When somebody comes out and I'm already in the position, which is my goal. I don't want to really chase option activity. I don't want to chase a name when it's already up 3% on the day when they start buying calls. The goal is to find these signals before they actually materialize, like we did yesterday in ZS. Right, so that's the whole goal, not to be chasing a name that's after 3 or 4%. Work was another one that was pretty good. It got a nice CNBC pump. This moved, believe it or not, up 10% today. And again, some of these small cap names that are left out of the major indices are kind of moving pretty decently on. Speaking of momentum, Datadog as well. Again, a lot of cyber. That's working pretty well. Speaking of another one that has been on our radar, CrowdStrike. There is a VPOC that's right up there. Another one too is SMAR, which has a VPOC right in front of it too. So these things might hit some overhead supply. So just be a little bit mindful. This one can go a little bit further, about another buck or so before it hits. But so anyway, so talking like pretty conservative right now. Again, just paying attention to what the tape is telling us. Limited breadth, or narrow breadth, I should say. And some areas of the market are continuing to work. But again, this is 3 or 4 days. This is 3 days of a rally now in Amazon, and and also 3 big days in Netflix too. Oh, by the way, I'm out of my Netflix position today. I got out of the last piece, hit all 4 targets in this. Again, here's my blotter. I'd like to show you what I did. I did add to some trades I thought we would get more of a bounce than what we got today. So I added, I got out of all of my SMH trade yesterday. Well, I put some of that back on. So it's just kind of trying a few day trades. I tried ServiceNow, which also saw a little bit of calls this morning, but it didn't work, so I got stopped out in ServiceNow today. And you could see just a couple other things. Lulu I put on in the beginning of the day, took a couple targets, forced a couple targets at the end of the day at the end of the day just to get myself to where I want to be with holding risk overnight. Same thing with Zscaler. I forced another target there at the end of the day, just making sure I'm not getting overexposed, because that's not something that I want to get to right now. All right, guys, thanks for watching the video, and I'll see you guys bright and early tomorrow in the trading room. Have a great night, everybody.